Hello and welcome back to Principles of Accounting 1. I'm your host, Dr. B, and this is our final discussion for the spring 2022 semester for Principles of Accounting 1. And today's discussion is going to be on the statement of cash flows. We talked briefly about the statement of cash flows in previous discussions. And as you recall, the statement of cash flows is one of the four primary financial statements. We talked about this, I want to say it was in the first or second week of our course. This is an 8-week course. So. I know it's going back ways. The statement of cash flows represents the use of the cash that the business has. So, in other words, what is the business using the cash on? That's what is reported on the statement of cash flows. There are three types of cash flow. There are operating activities, which represents the cash coming into and out of the business for day-to-day operations of the business. Operating activities is the day-to-day operations of the business. The second use of cash flow is for investing activities. Investing activities represents the purchase or sale of property, plant, and equipment. Investing, right? When we invest, we're investing in property, plant, and equipment. So operating activities, day-to-day operations of the business. Investing activities, property, plant, and equipment. The third type of cash flows in the business are called financing activities. When we finance, we're talking about loans, stocks, bonds, the equities. That's financing. So those are the three categories on the statement of cash flows. And we'll break down those a little bit further. And it's so important that you understand that part, because when you look at a statement of cash flows, we need to know how the business is using its cash. That's the whole idea behind the statement of cash flows. It tells me why did income come in and what went out. Okay, so the cash that comes into the business, where's it coming from? And the cash that's going out of the business, where's it going? What's it for? Those are the questions we ask ourselves when we look at the statement of cash flows. It's important to understand the cash coming into and out of the business for us to decide if the company has the ability to pay its own debt. If you don't have enough cash on hand, how are you going to run the business? You need cash to do everything in business. You need cash to purchase inventory. You need cash to pay employees. You need cash to purchase property, plant, and equipment. You need cash to pay your loans. That's all cash going out of the business. Where does cash come from? Cash comes from sales to my customers. I'm collecting accounts receivable. I'm also collecting cash. I might also get cash coming into the business from a loan that I took out. I might also get cash coming into the business from the sale of property, plant, and equipment. We're talking about the physical flow of cash coming into the business and out of the business. That's what the statement of cash flows is all about. Mike, you good? Mike?
I'm good, sir.
All
I'm
right,
good.
cool, cool. Just want to make sure, man. All right. So that's what the cash flows is all about. As managers, we use our cash to understand how to plan for the day-to-day operations of the business. I need to make sure I have enough cash to pay my bills. I need to make sure I have enough cash to purchase property, plant, and equipment. I make sure I have enough cash to do whatever, to run the business, and to make long-term investment decisions. That's why it's important to understand the statement of cash flows. Cash, as you know, is a highly liquid asset. Cash is highly liquid. I can use it quickly. Yep. I can also convert things into cash quickly. We call these cash equivalents. So if you ever look on your balance sheet, under your balance sheet under assets, you might see a line item that says cash equivalents. Cash equivalents are things like treasury bonds, certificate of deposits, or other type of short-term investments that I can quickly convert into cash. Another example might be something like Bitcoin or some type of digital currency, but I can quickly convert it into cash. These are a measurement of cash flows. Now, I mentioned that there are three classifications of cash. There are operating activities, investing activities, and financing activities. Operating activities are the use of cash for the day-to-day operations of the business. We have cash coming in from our customers from sales. We are receiving cash from collecting accounts receivables. That's day-to-day operating activities. Cash going out of the business for operating activities include things like paying your employees' wages, paying utilities, paying rent, paying other things like purchasing inventory. Those are all operating activities, day-to-day operations of the business. So operating activities, think day-to-day operations of the business. Investing activities represents the purchase or sale of property, plant, and equipment. Those are investments into the business. So when you hear investing activities, think property, plant, and equipment. I'm investing in the business. So cash coming into the business from investing activities is from the sale of property, plant, and equipment. Cash going out of the business for investing activities is the purchase of property, plant, and equipment. And then financing activities would include things like the business took out a loan, the business purchased or issued stock, the business purchased or issued bonds. These are all financing activities. Financing the business. So again, operating activities, cash is coming in from your customers. We're collecting on accounts receivable. Maybe we got some interest in. Maybe we received some dividend revenue. Cash going out of the business, we're paying our employees. We're paying our day-to-day operating expenses. Maybe we're paying interest on a loan or something. We're paying for goods and services. We're paying our taxes. Those are day-to-day operations. Cash coming in from our customers. Cash going out for our day-to-day expenses. That's operating activities. Investing activities. This is the purchase or sale of property, plant, and equipment. On the cash inflow side, we sold an asset. We sold a building. We sold an intangible asset like a patent or something. Maybe we're receiving cash from the sale of a short-term investment. Maybe we're receiving the cash from a note receivable, or something like that, right? That's investing activities, cash coming into the business, property, plant, and equipment, for the most part. A couple of other small things in there, but think property, plant, and equipment. Those are your hard assets, your long-term assets. Cash going out of the business, we're purchasing property, plant, and equipment, other intangible assets. Maybe we're buying short-term investments. or we're returning some money for a loan or whatever. From a note receivable. Financing activities, cash coming into the business from the sale of common or preferred stock. We are selling treasury stock. We are selling short-term and long-term debt. We are receiving cash from owners' contributions. Cash going out of the business, we're purchasing treasury stock. We're paying dividends. The owner took out some money. Those types of things, yeah. Loans, whatever. Sometimes on a statement of cash flows, you might see this thing called non-cash investing and financing. That means there was no cash used in the transaction. That could be an exchange of assets, some assets for other assets. It could be the retirement of debt, conversion of preferred to common stock, a lease, a capital lease transaction, purchase a long-term asset using a loan. These are all non-cash things. There's no cash changing hands in these transactions. What does the statement of cash flows look like? It always looks like this. It's always the same format. You have cash flow from operating activities, cash coming in minus cash going out equals net cash flow. So here's how it works. Cash comes in from our customers, from the sales. Cash goes out for our expenses equals net cash flow. For investing activities, we got cash coming in from the sale of property, plant, and equipment minus cash going out for the purchase of property, plant, and equipment equals net cash flow for investing activities. And then we have financing activities. Cash coming into the business from selling stocks, bonds, or getting a loan. Minus cash going out of the business for the purchase of stocks, bonds, or we're repaying a loan. Equals the net cash flow for financing activities. So, and then what we do is we add or subtract to get a change in net cash flow. Plus cash at the beginning of the period equals cash at the end of the period. So to formulate the statement of cash flows that we just talked about, Isabella, great question. Okay. So a question is, if we're lending money, so not quite. Okay, so here's how loans work. Here's how the loans work. If the business is taking out a loan, meaning I'm receiving cash to operate my business through a loan that I took out from the bank, the cash coming in and out of the business is through financing activities. It's a form of financing, right? I'm financing that by taking out a loan, right? It's kind of like when you buy your car, you're financing it by taking out a loan. The difference is you're actually getting cash. Or let's say it's a private loan. Okay, oh, I need a private loan for whatever reason. I need cash. So you go to the bank. You take out a loan. The bank gives you the cash. You have to repay that cash over time, plus interest, to the bank. It's financing activities. So although you're going to use that cash for another purpose, It's still considered financing activities because you received it as a loan. You didn't receive it as revenue, you received it as a loan. Make sense? I hope that helps to answer your question.
Yes, thank you.
Great, thank you. Thanks for asking that question. It's a very good question. Okay, to prepare the statement of cash flows, first we find the net increase or decrease in cash. Then we figure out what is the net cash change for operating activities. Then we do the same thing for investing activities and then financing activities. And then ultimately we find we verify everything, that where the cash came from is where it came from, where it went to is accurate. So it's all about finding the net change, right? That's what the statement of cash flows represents, is the change in cash over time. So we look at operating, financing, and investing activities to understand where the changes have taken place. For non-cash transactions, there's a formula that we use. We take liabilities plus equity minus non-cash assets to get the cash balance for non-cash accounts. So a couple of pieces of information you need to prepare a statement of cash flows. We need the income statement, the balance sheet, and any other information related to cash transactions. We can prepare the operating activities on the statement of cash flows in one of two methods. One is called the indirect method. The other one is called the direct method. The direct method is, think of it like a condensed version, okay? The direct method shows cash coming in from our customers minus cash going out for day-to-day operating activities equals net cash flow for operating activities. This example, 20,000. So cash coming in minus cash going out equals net cash flow. That's called the direct method. The reason why they call it the direct method is because I can directly see how the cash is coming in and out of the business. Makes perfect sense, right? And just think, this is like, it's all just cash, right? It's just simple cash. So that's why we call it the direct method. It's the easiest one to calculate. Cash came in from my customers minus cash going out for my operating activities equals net cash flow for operating activities. The indirect method is a little bit more complex to calculate. The reason why we call this the indirect method is because we are calculating this from indirect cash transactions. Here's what I mean. Instead of taking the cash coming in from my customers, I take net income. Net income is not representative of cash. That's why we call it indirect. Indirect. So no, this is like it's, in other words, this is saying here's another way to calculate the cash we used in operating activities. So we take net income minus an increase in accounts receivable minus increase in merchandise inventory minus prepaid expenses minus decrease in accounts payable minus decrease in interest payable plus increase from income taxes payable plus depreciation expense plus loss on the sale of plant assets minus the gain on retirement of notes equals net cash flow for operating activities. That's the indirect method. Again, the indirect method is a lot more difficult to calculate because we're not using the physical flow of cash. We're using net income plus or minus all the changes in my operating activities. That's why they call it the indirect method. It's a lot more complicated to compute. I personally prefer the direct method. It's the easiest, it's the most straightforward, shows us exactly where cash came from and where it went. But either way, you can see that we still derive the same response from either the direct method or the indirect. The indirect method, again, it's the most difficult to compute. And again, the reason is because we're using a lot of information that is not directly related to cash. So we take the net income amount from the bottom of our income statement. And then we use the changes, right, in our accounts. How do you find the change? You take the current year minus the most recent year. So current minus the most recent, 2019 minus 2018, to get the change. And we do that for cash, accounts receivable, inventory, prepaid expenses. And we do it for planned assets, accumulated depreciation. And then we do it for accounts payable, interest payable, income tax payable, total current long-term notes payable. And then we do it for common stock retained earnings. So we take our net income plus or minus all of the changes on our balance sheet to equal the total operating activities cash flow. So I got my net income from my income statement. I have all of the changes from my balance sheet. So net income from the income statement plus or minus all of the changes on the balance sheet equals net cash flow for operating activities. Again, that's the indirect method. I'm not showing exactly the uses of the cash. That's why it's indirect. But it'll get me the same answer as the direct method will. Okay. And of course, we need to make any adjustments for any changes we may have missed through current assets, current liabilities. When there's changes in current assets, current liabilities, we're either adding or subtracting to net income. That's how we make the adjustments. Adjustments, we do them because oftentimes the indirect method and direct method for that part, most of the time it's just estimates. So if it's off by a little bit, then we make the adjustments accordingly. For investing and financing activities, it's the same method. There is no direct or indirect for, well, there's direct method for the investing and financing activities. And a lot of it has to do with just identifying changes in related accounts. It's a three-step process, but it's very straightforward. We're taking the cash coming in minus the cash going out for the purchase or sale of property, plant, and equipment. We can also do it by looking at the change in property, plant, and equipment on the balance sheet for 1920. The second step is we are looking at the usage of the assets. And the third step is identifying the changes in the T accounts. For financing, it's the same concept. We're looking at the changes in financing related accounts. You could also do cash coming in minus cash going out of the business for financing activities. This one shows us how it looks on the balance sheet for our financing activity accounts. We're looking at the changes. And then we're looking at the T account. We're looking at the adjustment in the T accounts. It's just a simple three-step process. And then, of course, how do we verify that it's all correct? Well, we do this thing called proving the cash balances, where we're taking the net increase in cash plus the cash balance at the beginning of the year equals the cash balance at the end of the year. You could also summarize it using T accounts. So one never does, but yeah. Guess what? Ratios. I know, you love them. You love ratios. I know you do. It's okay. I like them too. It's all right. But yeah, a couple ratios. We'll talk about those here in a sec. So, it's important to understand the uses of cash, and that's what this whole conversation is about. Understanding whether they're operating, financing, or investing activities, very important. And the ratio. I know you're waiting for it. Here it is. This is called a cash flow on total assets ratio. We take the operating cash flows that we got from cash coming in and out of the business based off of receiving cash from our customers minus cash used in day-to-day operations of the business. That gives us our net operating cash flow divided by average total assets. Remember, you find average total assets by taking your assets at the beginning of the year plus your assets at the end of the year divided by 2. You could use a spreadsheet to prepare the statement of cash flows, but this is the 21st century. So in most cases, a financial accounting system like QuickBooks or NetSuite by Oracle or some type of accounting software will do all this stuff for you. So, but this is just an example of what it would look like in Excel if you really wanted to go that route. Okay, and this one just kind of shows us the impact of the changes and the adjustments that sometimes we have to make. Revenue or expenses plus or minus any adjustments gives us the cash receipts or payments. Cash receipts minus operating equals net cash flow operating activities. Very straightforward. These are the reasons why we receive cash and the reasons for paying cash. But by now you already know all this stuff. Kind of like this cheat sheet actually, because it kind of shows us the changes. That part of it. That, my friends, is the end of our discussion on the statement of cash flows. Comments, questions, concerns. Statement of cash flows. Really, you're all good? You got all this stuff?
No, I have a question. So you said that the statement of cash flow, it basically reports assets, liabilities, and equity, or I mean, it doesn't, but it kind of does, but it does goes into the inflow and the outflow of, you
Yeah,
know.
you're on the right track. So, Makia, here's how I want you to think about where the statement of cash flows falls in line. So we started off with our income statement. The income statement shows us the revenue and the expenses, right, from the day-to-day operations of the business. So we have revenue minus cost of goods sold equals gross profit minus expenses equals net income. That's our income statement. The balance sheet which is the next one, next financial statement, shows us assets equals liabilities plus equity, the balance sheet. Those are the three categories on the balance sheet.
Mm-hmm.
All of that information on the income statement and the balance sheet flows into the statement of cash flows. The statement of cash flows represents the physical cash coming into the business and out of the business for operating activities, day-to-day operations, investing activities, purchase or sale of property, plant, and equipment, and financing activities, which are things like acquiring a loan, repaying a loan, stocks, bonds, equities. So, in other words, the information that comes from the income statement balance sheet represents the physical flow of cash on the statement of cash flows from those two financial statements. So we can see how they're connected. So Makia, what I think what you're getting at is on the balance sheet, we have assets, liabilities, and equity. Well, we know cash is an asset. We also know that a loan is a liability. And we also know that stocks and bonds are equity. So that's how the balance sheet relates to the statement of cash flows. But the statement of cash flows represents the actual flow of cash for those three categories, right? So that's kind of how they're connected.
Okay. Thank you. That definitely answers my question. Okay.
Cool. Yeah. Sometimes it's all about like identifying how everything's related, That's
Right.
what it's all about. Cool. Great question.
Thank you.
Are there any other comments, questions, or
I,
concerns about the statement of cash flows?
I have
Isabella.
a follow-up question.
Yep.
The operating cash flow, when you're calculating the operating cash flow, I understood that you use the net income and then you deduct or some the changes in the accounts. But then you use only the accounts that are related to the operating cash flows, not
Correct.
the whole balance sheet, right? So
Yep.
just those accounts. You have to identify which accounts, which is what, and those that are related to operating cash flows, then you do the calculation with those accounts.
You got it.
Is
That's
that
that's
correct?
100% correct. Yep. So on this slide 20, on the right-hand side, we have the balance sheet. And we're looking at the changes to things like cash, accounts receivable, inventory, prepaid expenses. Those are all operating accounts that relate to day-to-day operations of the business. We're also looking at things like plant, day-to-day operations, depreciation, day-to-day operations. We're also looking at certain liabilities like accounts payable, interest payable, taxes payable. Those are all related to the day-to-day operations of the business. So to answer your question, yes, we're only looking at the accounts that affect the day-to-day operations of the business when we're looking at the indirect method for operating activities.
And for the other two, you can use the same approach, and then you get just the accounts that are related to the investing and the financing.
Correct. Yep, that's absolutely right. And you can use that same approach, or you can use the direct method, whichever's easiest. Because the direct method is really the easiest. You just take the cash coming into and out of the business minus the into the business minus out of the business for those respective activities. But yeah, you can use the same method for investing and financing. Investing, we're only looking at the accounts for investing. For financing, we're only looking at the accounts for financing. Yeah. Good question.
Okay, thank you.
You're very welcome. Excellent question. Any other questions about the statement of cash flows? Y'all good? Okay. Now, before we adjourn, I want to call your attention back to the classroom. So today is our last day together. I know. Oh, I know it makes you sad. It makes me sad too. Some of you, I'll see you in 2 weeks' time. Okay. So after next week, we have the spring break. Don't worry, I'll see you again, Selena. I know I will. I'm sure of it. At some point, I'm sure. Maybe you take accounting too. So here's how it works.
Oh,
Here's
I
what
will,
we got.
Professor. Oh, I will.
Come on, Mike. You can take accounting too with me. Yes.
Sir, if you're here during the summertime, I will literally be the first guy in the class going.
I'll be there.
I am that eager to beat this once and for
Cool.
all.
Right on. I appreciate that. So here's what I got for y'all. Here's the deal. Now remember, this Sunday night is the last day. It's the last day for everything. Okay. So here's what I need from you. I need you to complete the Chapter 15 quiz, the Chapter 16 homework, and the final exam. And anything else you are missing. If you, for some reason, didn't submit your work from last week yet, you know that hurts my heart. You know that, right? Most of you are on time. Some of you fall a little behind. You have reasons. I understand that. Okay? I'm not going to penalize you. I just want you to understand that if you are missing anything, you need to submit that by Sunday night. That includes Chapter 15 quiz, Chapter 16 homework, and the final exam. I cannot and will not accept anything past Sunday night. Sunday night is the last day of class. That is also the last day I can accept anything. Because Monday starts spring break, I need to report your final grades to the university by Tuesday. Okay, so please, you need to make sure that everything in the grade book is completed. Everything in the grade book must be completed by Sunday night. And no, I cannot make any exceptions to that requirement. Questions on that? Now you're probably wondering, Dr. B, what's on the final? Mike, go ahead. Is that what you're going to ask?
No, I was just gonna say, you're loud and clear, and plus I'm gonna take my time this time on the work, on the exam, final
Great.
exam.
I appreciate you doing that. So yes, just what Mike just said. Please start early. Some of you already completed the final exam. Yay! Thank you so much for doing that. Some of you worked ahead. Yes, thank you. That's good for you, right? It takes less stress off of you. So, in order to prevent yourself from stressing out, please take care of these things as early as possible. Don't wait till the 11th hour on Sunday night. Don't do that to yourself. Don't do that to yourself. The final exam, what does it cover? It covers everything that wasn't covered on the midterm. It's 20 questions, a mix of true, false, multiple choice. There's about uh, two, three, four, about 5 questions are math driven. But it's true, false, multiple choice, 20 questions. They cover chapters, let's see. They cover chapters 9 through 16. So it's 9, 10, 11, 12, 13, 14, 15, 16. So that's 8 chapters, right? So if there's 8 chapters and there's 20 questions, that's about 2 questions per chapter. My recommendation for success on the final exam is to review your previous homework assignments and quizzes. I also recommend that you review your notes, review the PowerPoint presentations. Heck, if you want to, you could even rewatch some of the lectures. But if you do all those things and take your time, it's open book and open notes, so there's no reason for you not to pass it. Take your time. When you get to the math ones, you know it's going to be a formula. So look for the formula. You'll do all right, I promise. So it's 20 questions, open book, open note, covers chapters 9 to 16. There's about 2 questions per chapter. I recommend you review your homework assignments and quizzes, the PowerPoint presentations, your notes, and it's open book and open note. So start it early. You could even open it now. Look at it. Save answers. Save and close. Save and close. Look at it. Answer it. Save and close. Come back to it again. Okay? Only click submit when you're ready to submit it. When you hit submit, that's it. It's done. Yeah? When you hit submit, it's done. So save and close, review, save and close, answer a couple questions. You could print it out if you want to. I don't care. But just make sure that you answer all the questions. Don't leave any blank. Okay? Make sense? All good.
Yes.
Awesome. Thank you so much. Cool, cool, cool. Okay. Now, this is our last session. So, it's the last time you're going to hear me say this, at least for right now, until I see you on Principles of Accounting 2. Well, which, by the way, you need a C or higher total to pass this course. You know that, right? So, most of you are there. Some of you are almost there. But just make sure you get there. Okay, I want to see you pass. So, that also reminds me, remember, there are 2 attempts on every homework assignment and quiz. If you're not happy with one of those grades, take one again. Okay. And if you need help, email me, call me, set up office hours. And without further ado, I want you to all to remember to stay safe, wash your hands, do the right things. Enjoy your spring break next week. But before you do that, make sure you get everything done. And if you have any comments, questions, or concerns, email me, set up office hours, call me, whatever. Okay, I'm here for you. And I wish you all the best. And if I don't see you the second part of this semester, I'm looking forward to seeing you in the fall.
Thank you, sir. You will see me. Thank you so much.
Awesome. Thank you, Miss Edwards. We appreciate you.
And I enjoyed your course
Thank
very,
you.
very much.
I do.
Learned a lot.
Thank you so much.
Thanks, Professor.
Thank you all so much. Take care.